Hi, and good afternoon. I wanted to send you the most recent market report from October, which really shows the state of the housing market in the Adirondack Park and surrounding periphery communities and markets. It's really important too to understand and interpret the numbers, the sales metrics contained in this report, to really glean meaning and value and understand what's really happening out there. So that's what I wanted to do today, is give you kind of a high level from 10,000 feet overview of what's happening in the market and help you interpret and understand the metrics contained in this report, as it may help you in your decision-making process. So at a high level, what we've seen in October is an increase in both pending sales and closed sales by 12% and 7% respectively. We've also seen a reduction in the month's supply of inventory. This metric really tells us the absorption rate or schedule at any given point in time. And what that means is the amount of time it takes to absorb current inventory or properties for sale, given the current state of demand. How this is calculated is looking at the number of houses for sale, the total inventory at the end of any given month, divided by the average pending sales number for the trailing 12 months. So for October, for instance, we had a reduction by about 8% in the month supply of inventory to around 17 and a half months. So what that means is that it takes roughly 17 and a half months to sell the current inventory of properties for sale, given the current state of demand. Now, if you're from a suburban market in an urban area closer to jobs, transient movement of workers in and out of a community, you may wonder, wow, that is a really long time to sell a property. However, in the Adirondack Park, in resort communities where these are often not primary residences, but vacation, secondary properties, and investment properties, it's fairly typical. So what this all means, though, is that we're having an increase in velocity and transaction volume, which is a very healthy sign. Now, unfortunately, one of the reasons why we're seeing this is that the closed sales price and median sales price has both fallen. So one might surmise that the reason in which we were able to achieve these higher numbers as we head into the winter, which is traditionally a slower time in the markets, is that sellers were forced to take less money for their properties in order to complete a transaction. Now, this is generally the case, and this is what happened here, but also there's more to it. Really looking at the broader economy, we see a lot of trends and heartening metrics. For instance, historically low interest rates still prevail. So we have rates that are really, really low. The Fed has now missed on purpose 2 opportunities this fall when they've met to increase rates. They have one more opportunity in 2015 in early December, at which point we have all signs from Janet Yellen and the Federal Open Market Committee that they will actually start to move rates north. So what that really creates is a little bit of a stimulus in the market. Generally, people want to lock in a lower rate, a fixed rate for a longer period of time. Obviously, the cost of debt and the cost of capital is lower. Therefore, the carrying cost of these properties becomes lower as well. So we look at that and we are encouraged by what that's going to mean for us for the rest of the year, but also the early part of 2016 as rates still remain very low. Also, some of the reason why I think we're seeing lower prices in order to complete transactions is, we're still in a strengthening and recovering economy, generally speaking, but also in the housing market. Now, we're 5 years out of this, 6 years since the malaise and the bottom point in 2008, 2009, when things were really, really low price-wise. And we've experienced a lot of tumult and uncertainty in both the global markets for equities and bonds, and also the housing markets nationally. We had a pretty abysmal month in October for the stock market, experienced a correction of about 10%, really hurt returns and confidence. And we have increasingly uncertain times globally with geopolitical incidents and risks, with the political climate in the United States and not knowing exactly where the leadership is going to come from next year after the presidential election in November, and just general angst and anxiety about the state of the economy and the direction of the country. So all of these things contribute and really play into how the U.S. housing market acts and behaves, and then how that trickles down to regional markets such as the Adirondacks and the surrounding markets in this region and area. So really what I gather and what I can conclude is we are experiencing, again, a strengthening economy and a strengthening housing market. We have encouraging signs of increased activity, less time on market, more and more pending and closed sales. but a little bit of softness in prices just of late in the fall. I expect that to change also as we go through the spring and first quarter of 2016. So generally speaking, I think we're in a very healthy point here. So I hope this helps and provides some value on the state of the market in the Adirondacks and surrounding communities up there. If you have any questions about the market or anything contained in the report, which again, I've included a link below to that report, please don't hesitate to reach out. Because as always, we're here to help in any way we can to help you understand the market, understand your decision-making process as it may relate to buying or selling real estate, and any other questions that we can help with. So have a wonderful Monday and rest of your week. Happy Thanksgiving, and we'll talk to you soon. Thank you.